Alternatives are different from traditional assets, just like a Jeep is different from a Camry. The Jeep probably costs more than the Camry, and it's not as smooth on the freeway, and it might not be your first choice for an evening out on the town. But if you try taking that Camry on an extreme camping trip, you'll quickly see the value of the Jeep. So we're talking about two different things that serve two different purposes. When you're comparing Longboard to other alternative investments, yes, there's definitely going to be a cost difference. There's also going to be a value difference. At Longboard, we specialize in maximizing diversification globally. And that means that we're trading commodities, bonds, interest rates, global equities, currencies. We're talking about 140 markets all around the globe, 5 different continents, and 25 different currencies. The markets that are the most diversifying in nature, we feel, are the commodity markets, especially the international commodity markets, and they tend to have less liquidity than some of the bigger and deeper financial markets. So we want to be able to treat Japanese commodities the same way that we treat US equities, or European agriculturals the same way that we treat US bonds. We don't want to have to concentrate our risk-taking and our assets into highly correlated financial markets like stocks and bonds. When you start investigating new alternative strategies, is that the lowest price usually isn't the best business decision. Alternatives are new, and they require a lot of transparency, explanation, setting of expectations. They're not all created equally. People learn over time to consider the value that they're getting for the price and look at both of those variables in order to make a good business decision. And it's pretty rare that the best business decision corresponds to the absolute lowest possible price.